the purpose of owning gold physically is that I don't trust the currency. I don't trust the government. I don't trust the financial system. So why in heck would I trust my gold to be held in a financial institution outside of my own purview to a third party? Doesn't make any sense to me. So
Agreed.
I do own both. I tell my clients, take 5% of your portfolio, of your net worth, and put it into physical gold that you control. And then if you want access to the price appreciation of gold, then own it in an ETF or in a gold mine.
Yeah.
Understand that you're sacrificing the ownership of it for that liquidity. You don't really, it's not the same as owning physical gold.
Mm-hmm. Yeah. Yeah. I'm with you there. Okay. What's your take on the silver market, Michael? Too soon? Too early?
I chose platinum over silver because there's a lower beta profile, and because it's more of a precious, it has a little bit of an industrial component, as I said, but it's also very much of a precious metal. Mm-hmm. Remember when everybody had to upgrade their rings to platinum just before it crashed? It became less valuable than gold. Now upgrading your ring might be to get rid of platinum and buy a gold ring.
Sure.
But no one's upgrading their ring to silver. So it's on my radar. I don't own any of it. But I've used platinum instead of silver.
Yeah.
As my surrogate to get longer precious metals.
Yeah.
Rather than just increasing my allocation to gold. I don't hate silver. It's just I don't own it right now.
Yeah.
By the way, silver, one of the things I hate the most about silver is that it's got the highest volatility profile of any of these metals. Yep. And you go back and back test it if you don't believe me. It's very hard to make money in silver over long periods of time.
Yeah.
Whereas gold has outperformed the S&P 500, including dividends, since the year 2000. Yeah.
I'm with you there. And for the bull riders who watch this show, that volatility can be exciting. I get it. Right. Right.
Timing is everything in this business. We've seen commodity prices really move up. The copper price, that started to move up strongly. We're not far off all-time highs, although you wouldn't know it from the junior sector and copper companies in general. But I think over the next year or two, we're going to see that really correct to the upside, and you're going to see a lot of money come into the sectors. Vizsla Copper, we're the team that brought you successes, including ISO Energy and Vizsla Silver. If you want to learn more, you can find us at vizslacopper.com.
Big topic actually last week at this conference I was at. Folks just kind of doing their best to assess when the entry point for the silver miners should be, funded developers and all this stuff. Okay, so I appreciate the portfolio breakdown, 10 to 15% in inflation hedges. Did you say 68% in T-bills, roughly, thereabouts?
Mm-hmm. Yeah.
10% U.S.
right
equities.
now.
5%
and bear in mind, sorry, I cut you off. Go ahead.
No.
Finish.
No, that's cool. I'm just breaking down the portfolio as you mentioned it.
Yeah, so 68%. But bear in mind, I am an active manager. I run my model on a daily basis. There's highly stochastic components to it. I could take down that cash. Yeah, I could increase it at any. So this is not something that a week from now you could say, well, Pento was long 10%. Precious metals and he's getting killed. Well, maybe I am and maybe I'm not. So only my clients know, and I've had a long history of providing good, stable returns for my client, for myself and my clients, precisely because I am an active manager. And when I saw, when I was actually fairly long the market in 24, but actually sold a lot of it off in December of 24 because the valuations got so extreme. And I know that deportations and border closures, while they're very beneficial for the country in the long term, in the short term, that's half of GDP growth. Your labor force growth is half of the input to GDP growth. The other half is productivity. So I knew that the growth in the economy wasn't going to support the earnings growth that was promised by Wall Street, which is exactly correct. And therefore, at 210% market cap of equities to GDP, the risk reward ratio wasn't there. So I took down the portfolio significantly, and then increased it again on April 9th when Taco changed his, abrogated his Liberation Day tariffs, And now we're back to we're back to being long the stock market. We have a net long position. We are not net short, but we're cautiously long, and we are ready to pull in our horns when the highly stochastic components of my model tell me, hey, that's what the big boys are doing. And girl,
Yeah.
I guess big boys and girls too.
Big boys and big girls.